So I wanted to start the shot with hey, because right before the show before the show was the best part of the show. I wish you could join us, stock nerds and market lovers. So, so Zach shows up, and I don't know what happened, but I just wanted to say hey to him. And then we started down this path of shows that won't get made anymore. And I said, I don't think you can make Fat Albert anymore. Like it's not in with the times. Yeah, well, it started out with Bill Cosby's not in vogue, right, and then and then it went to I don't think that show gets made anymore. And then I said, I don't think The Office, the TV show The Office, would get made anymore with some of the
off humor.
Yeah, it's not appropriate in 2021.
But it is funny. It is funny for sure.
And then which led to a whole bunch of other things. And I just wish there's characters on Fat which led to there's characters on Fat Albert, but the title character is not the title of the show. They're mean to Albert, man. Yeah. And so which then it led to, are there any cartoons that have pleasantly plump Alberts in them anymore? And I don't think there are. And then I think Hunter came out with Peter from Family Guy, but that's an adult cartoon, which interesting. Simpsons is Homer, right? So TV dads could be pleasantly plump. And then which got me thinking just now, not a cartoon, but Webster's dad was pleasantly plump. Who are the fat dads in the world on TV? I got Homer. I've got
John
Peter.
Goodman.
I was going to say
Roseanne's dad. That's a great one, Don. Are there any other?
They got rid of Roseanne though, but now John Goodman lost some weight.
John Goodman did get thin. Yeah, he found the keto diet. Who else? Are there any other portly dads out there from TV land? I came in with Webster's dad. That's all I had. Oh, Mr. Belvedere, not a dad, father figure.
That's right. Okay.
Hilarious show.
Mr. Belvedere, Bob Uecker.
Yeah.
The fact that they took Bob Uecker, who came from baseball fame, and then Miller Lite commercial fame, and then cast a sitcom around him that came on after Who's the Boss? Tuesdays on ABC. That's honest to God. Who's the Boss aired first, right? They took Tony Danza, which, by the way, not a portly father figure. Tony Danza moved in with Angela because I don't think does that situation happen in 2021 where a guy shows up with his daughter in a van to do some handiwork and they end up moving in together?
That's a good question.
I don't think any of that happens. But listen, stock nerds, market lovers, we have more to talk about. And here's the thing. There's a lot going on, right? Really serious stuff happening in the world. And the markets, are they turbulent? They're up today. But they might be going through a little bit of metamorphosis, like a butterfly. That it changes, instead of like the markets are different. Like you get this caterpillar that changes into a beautiful butterfly. When the markets go through a metamorphosis, they just sell off, right? And they're not pleasant often. And we're going to talk about that here in a moment. But I think, with all the serious news coming out from overseas, there's a lot of things that are affecting markets. And some might say it is what's happening in Afghanistan, or some might say it is what's taking place in China. And I don't know. We're not going to know, right? Till it happens. It's like this takes me back to the 2015 timeframe where it was the Greek debt. Remember this, Danny? And by the way, Danny, speaking of Greek debt, you've got a lot of chest hair popping through that shirt again.
Man.
Thank you. I don't know who laughed because I can't see the fellas.
Yeah.
But speaking of Greek debt, so it was this Greek debt crisis, right? And everyone was focused on they say the EU, but it was really Germany. Was Germany going to bail out Greece? And who was the main character from he was on TV like every day pleading his case.
Mario Draghi or
he was the Greek prime minister. I forget his name now.
Alex? Do you know who that is?
That is not fair. That is 100% not fair.
Alex the Greek should know.
That is 1,000% unfair. I'm just going to... Jesus, Danny.
He was a teenager then.
Something-opolis.
Yeah.
Teenager. It was only 6 years ago.
That narrows it down to half the islands, John.
Oh, okay. Before we go down this road anymore. But really, it was China. It was China about to devalue their currency. They took their currency down, and the markets just fell out of bed. And there was this big margin down day on Monday after a couple of really rough days, right during options expiration week, I believe. in August of 2015. And so now we've kind of got this similar setup going on. And I want to discuss that as we get into the show, where there's a lot. I mean, you've got geopolitical stuff going on, okay, which has pushed back what China wants. This fairness and transparency with their companies, and they want to break up monopolies. All right, we're going to talk about that.
They just want, period.
We're going to talk about that. And then you've got what happened last week. And then we referenced the chart. And let me just pull this up real quick. I think it's over here. The consumer sentiment just plunged. 10-year low last Friday. And that has always been, to me, a leading indicator. I studied it. I took on the extra work of once I learned, I know economic reports, right? But then I was talking with this economist who happened to be a professor at my grad program, and he works for the FDIC, and we're talking about like leading and lagging indicators. And he says, you should study consumer confidence. And then I started plotting, all the reports against the S&P, and I'm like, oh my God, this is actually a leading indicator. This is pretty interesting. So I don't know what wins the day in terms of what drives price of the markets. But if you said today on August 20th, what drives price, I think it's still consumer sentiment, because we're a consumer-driven economy. We're not a industrial economy like China is an industrial manufacturing economy. But if China is economically saber-rattling, and we shouldn't lose sight of that. But I've got some other things I want to talk about beforehand, just off the top of the show. Then we'll get into the meat of the show, and then we'll get the flow going. You want to hear something interesting? We're talking about history. Before the show is always better, in my estimation, has always been better than the actual show that we produce. And that's not hyperbole. Like, it's just banter, right? And I think people would be interested to hear the banter. Like, what are we actually talking about and stuff like that, kind of behind the scenes look. And maybe one day we'll just have Zach running the audio.
Hidden camera.
Just assume when you're in here, I'm recording.
Yeah, that's probably a good approach. So speaking of geopolitical events, so I was a Marine. I was a Marine helicopter pilot. Did 3 deployments to Iraq. I never went to Afghanistan. Do you want to hear some history, Daniel?
Sure.
About what's going on. So the Marine Corps replaced, and I don't think you can't see it here, so I'll close these in a minute. The Marine Corps replaced their CH-46 Echoes. That's the airframe I flew. With the Osprey, which is the vertical takeoff, fly like a plane. Really cool technology. When I was in flight school in 2000, right, I became a Marine in 99. When I was in flight school in 2000, 2001, they were saying, hey, the Osprey's coming, you can sign up for the Osprey. Osprey never got there. Like, it just really bad setbacks. Osprey didn't come online. The first squadron of Ospreys didn't come online till, I believe, November, December of 2007. This thing had been in development since the 80s. So it took forever to get the Osprey there. The airframe, when I started flying, it was already like 50 years old. Okay.
Mm-hmm.
And but they would modernize it, and they go through grooming of the aircraft.
That's what they call the frog?
Yeah, the Frog. And so it got 2 rotors on top. So the Frog, I flew the Frogs that were flown in Vietnam, that were developed before Vietnam, flown in Vietnam, and then throughout the 70s, 80s, 90s.
It was a big taxi
and
cab,
2000.
right?
No, well, it's medevac. It's
But I mean, it's a big transport. It's
not big. It's a bigger helicopter, but it's not this. It's not CH-53 Super Stout. It's not.
Well, for a helicopter,
It's pretty big. Yeah. So I'm watching events unfold, and the best part about the Marine Corps, in my opinion, one of the best parts about it, like, whenever something happens, like, there's like this brother and sisterhood of people, right? Like, like, you're just automatically, like, you might not have spoken to someone in 10 years, but you're just like, see this? Oh yeah, and you're just like right back in, like, we've been flying, like, missions together. Anyway, so one of the Frog community is pretty tight. Marine Corps is pretty tight, and it's smallest of the services, and pilots and air crew in general we're the smallest component of that entity. So someone picks up on that the State Department was using old Marine Corps frogs. And I didn't know this. Like, I didn't know any of this, right? Like, I'm, not a Marine anymore. And so since the Marine Corps started getting rid of their frogs to replace, with the Ospreys, they were giving them, or the State Department was buying them. I don't know what they were doing, but they were using them as the embassy air. So the embassy in Iraq, the embassy in Afghanistan, in Kabul, they're flying these planes, these helicopters to transport people, okay? And it's really freaking expensive. And so that's why they were driving more people. But as things became tenuous in Kabul, they were using frogs to get the consulate people out and get them over to the militaristic side of the Hamid Karzai International Airport. And get this. Now, here's the history. And by the way, here's the helicopter. If you want to see it, it's Dr. Mark. It's this that's on my screen. So that's what I flew in the Marine Corps. That's on the deck of a ship.
Good looking helicopter.
Oh, it's a beautiful helicopter. That thing is the Cadillac of helicopters. Let me tell you something. Your best lift with helicopters isn't like a Bell Jet Ranger, like you see the blades on top and the propeller on the back. Like, no. Your best, smoothest ride is two rotors on top. And so, and I know that because I've flown both machines, and I'm telling you, one just beats the air into submission. That's your Bell Jet Ranger. This one, magically, it's the helicopter Jesus would want to get back to heaven. Like, if he had to take a helicopter to get into heaven, he'd be like, I'll take that.
It's the golden chariot.
Oh my gosh, yeah, Jesus himself, right? Like at the right hand of Pontius Pilate, like the whole thing. Like, speaking of Catholicism, and so the frogs that were used to evacuate Saigon. There's one of them that was used in the mission to get the consulate people out of Kabul. Like, that is astounding.
And you could see the comparison photos.
Well, so on this,
evacuating the embassy.
Let me circle this. So on the other side of the helicopter, so there. Oh, my screen won't let me draw, but where my arrow is, it says 7654. Those are the last four digits of the Buno number. And so every helicopter, when it's born, is assigned a number. And that number is actually on the other side of the aircraft.
It was on the back like a license plate.
Yeah. And some really observant Marine, right, said, I bet you that was you. Like, just wanted to know. And found the Buno number on one of the planes, on one of the helicopters that was used, like, because there's pictures. You could Google it now. Like, it's out there on the Facebooks, on the interwebs. What an amazing piece of history, right?
Yep.
And now, because these helicopters are so hard to maintain, the State Department's just leaving them there. It's crazy. Like, these things are so...
Along with a lot of other stuff.
Oh, yeah. We can get it. Yeah, that's what I kind of did. That's what I wanted to avoid a little bit there.
Tim, I'm curious, because you trained in these things. How confident are you an untrained pilot would be able to master the Jesus chariot of helicopters?
They're going to die. You're going to die. Like that.
You need lots of training.
Like that whole scene.
I don't know, yeah.
Where Arnold Schwarzenegger jumps in a Harrier and just starts flying it. And was it True Lies? No.
True Lies.
Wow. Yeah. Okay. I don't watch movies, but somehow I remember this. It's so unrealistic. One of the hardest things I've ever had to do, because I'm a little bit dyslexic. Like, I'm seriously a little bit dyslexic. I don't know why. Like, my brain doesn't see things the right way or compute things the right way. But when you're flying a helicopter, so your wing is on the top. Like, it's really easy. Like, when you're flying a plane, right? Like, my phone's a plane. And you've got wing, like your air goes over the wing, it produces lift, and it's really simple to understand, and the damn thing just flies, man. Well, now you've got on a helicopter, depending on how many blades you have, those are individual wings spinning above you, and so where an airplane takes power forward to generate the lift, and you pull back to get up in the air. Now your wing, it takes it from 2 to 3 dimensions to like 4 dimensions. And so you've got your wing spinning above you, and now you're controlling, like, your stick, your right hand is your stick. So you're controlling the aircraft with the stick, you're controlling power here. So you're producing lift by turning the blades, and then now with your feet, you can't you're getting yaw. You're getting yaw. So
okay.
it's the most amount of hand-eye coordination. And there came a time in flight school, like I'll tell you the exact truth. I almost flunked out of flight school because I could not figure out how to hover. And when I say I almost flunked out of flight school, you get an on wing. And so nobody knows. It's like the stock market. Nobody knows the stock market, right? Someone has to teach it to you. And so someone has to teach you to fly. Some people are more natural at it. I was not one of these people. So Captain Browning, the most patient human being in the world, Marine Corps aviator, I think he flew 53s. And so he says, look here, Lieutenant, if you don't start learning how to hover, I'm going to have to recommend you do something else in the Marine Corps. and that's like a lot of pressure, right? Because we'd go out to this spot in Whiting, Florida. I'd pick up the helicopter, and it was just all over the place. And like I couldn't get any of the skill set. Like you're only 5 feet off the air, but yet I almost rolled the damn thing like how many times? And finally, one of the times I was messing up, like you're talking 6 hours now, like 6 hours, like over the course of a couple different flights, right? And you're just coming back defeated. And by the way, you're already a trained aviator. Like you don't have your wings. Like I already knew how to fly because every naval aviator goes through. You fly a T-34. Now it's a T-6 Texan, I believe. It's a T-34, so it's 525 shaft horsepower. You've done aerobatics, like you've done loop-de-loops, aileron rolls, like you know how to fly instruments a little bit. Like you can fly a plane. It's just this one skill I couldn't get. It's like the most amazing skill.
Well, hovering's important though, because that's how they get in and out of the helicopter.
I've heard this, and so I take it over to the tree line, like it's a forest. And it just happened to have
that's a big weed eater.
Runway. No kidding.
For sure is.
And so I drifted. Like I couldn't control the damn thing, and I kept drifting. And I drifted over to the tree line. And like we're like this close from the pine tree. In Northwest Florida is all pine trees. And all of a sudden I could hover. And Captain Browning says, "Give me controls." Takes it back to a spot, on the runway. Pick up the aircraft.
Maybe the Jesus took the wheel.
No. He says, take the
That ought to be a song.
I've heard this, yes. Is it Miranda Lambert? And so he goes, "You have controls." I pick it up, and I can't hover again. And he says, "Give me controls." Flies me over to the tree line. Says, "Pick up the aircraft." And I could hover like that. He says, "It's your eyes. It's your perception." Because the scan is out, down, in, out, down, in. So you have to be able to look at your eyes and go out, down, in, out, down, in. So you're scanning out, what's in front of you, down, what's below you, back at your instruments, out, down, in, out, down, in. He goes, "There's something not registering." He goes, "But the trees are bringing something into perception. We're not leaving this spot so you can hover."
You have no perception. Yes.
There was something in the way I was perceiving the deck, and through the bubble of the aircraft, all the helicopters clear chin bubbles, and so I couldn't see. I wasn't computing, but once I got it was that magic moment that I was like, oh my God, it's like a second skill. And then that.
Yeah.
Yeah.
It helped. Well, so that's similar to snow skiing. When you're snow skiing and you're in a blizzard, it's called a whiteout. You're in a whiteout.
Yeah.
You don't have any everything is white. You can't, in the middle of the slope, you can't. So you need to go ski along the tree line right next to the trees because you have then you can see, you've got perception.
Right. Makes sense.
Yeah. So anyway, but I thought because and by the way, that story emanated because Don, we just had to talk about turning our phones off.
I forgot to turn my phone off silent.
So that all came out because Danny said something. Don called Danny Cliff Clavin. Danny acted like he knew who Cliff Clavin was.
I know who Cliff Clavin is. I love that. His thing on Jeopardy was a classic when he won every question and then doubled down on the final Jeopardy and lost.
Yeah. No thanks. So Danny does know who Cliff Clavin is. So anyway, that's where I'm like, oh, Danny, I got something for history for you. So I didn't plan to start the show for this. We'll talk about this next week.
You know the best line, real
What's
quick,
that?
best line in Cheers ever?
What?
When Norm walks in, Norm! And he said, "How's it going, Norm?" And he said, "It's a dog-eat-dog world, and I'm wearing milk-bone underwear."
Still holds up all these years later. It's good.
Or when Fraser and Lilith were trying to get get their baby to talk. They thought because they were so intelligent, the baby wouldn't speak for like 9 months.
Yeah.
And Fraser was sneaking the baby into the bar. And Lilith came one time and caught him and started yelling at him. Finally, Norm walks in and the baby goes, Norm!
What's the third best line from Cheers? Now I'm curious. I've got 1 and 2.
Oh, those two are tough to top. I have trouble rating those.
Awesome. Good. Did you watch a lot of Cheers, Dan? I never did. I missed Cheers. Bummer.
Gosh,
That was a great show.
I contended, Tanya and I have been having a discussion. I don't know if we talked about it on the show recently, but we'll probably get to it next week. From the business page of the New York Times. Workers in demand. Workers are in demand, obviously, from anyone who knows, going out into the economy these days. And many are seizing the moment to trade in dead-end gigs for occupations with growth potential. And if you've seen the performance of Uber, of Lyft, they're severely underperforming the overall market this year. And my whole thought process is that nobody wants to do those jobs. Like they're jobs. They're not careers. And the article goes on, people are trading in those types of gig economy. And I wonder about the validity, and I'm not being hyperbolic when I say this. I genuinely wonder about the validity as an ongoing concern of Uber. And I know that makes me sound ignorant. Well, Tim, you realize there's like a gazillion shares of Uber out there, and they deliver food. And just ask yourself this, folks. You want your kid to grow up to be an Uber driver. And
Good point.
And so I don't mean that rudely, because I think that if you're putting yourself through school, like it doesn't mean that, Tim, cab drivers are people too. That's not what I'm saying. No one aspires to do that. And I think that workers are realizing their value, and they can get more, they can do more, they can be more. The opportunity, to Zach and I were having this conversation last week. Like, if you wanted to learn a skill set, it's on YouTube. YouTube is, I think, it's indoor plumbing, air conditioning, and YouTube, right? Are like some of the greatest inventions, because you can learn. Well, listen, no one wants to poop in a bucket, and so you can learn just anything. Like, if Danny, you wanted to learn,
You think you can learn to fly one of those helicopters?
I bet you it's on there. I bet you it's on there.
Some crazy somebody's got a helicopter.
They've got some kind of simulator that you can try to. I bet you it's on there. And so, although I think these jobs are bridges to get where you want to be, I don't think they're careers. And I don't know if there's enough people. Like, people are complaining about inflation, right? Speaking of inflation, history. You ready for history? I learn something new at the office every time I come in. So if you look on the walls of the office, by the way, stock nerds, market lovers, if you want to come into the office, we'd love to have you. Come on in, have a cup of coffee. So we're in Dallas. You could fly in. If you're out of town, fly in Southwest flight, right, literally 20 minutes from the office. So Danny, outside of his office, has 2 front pages of the Wall Street Journal 10 years apart, 1999, 2009. One marks Dow topping 10,000. 10 years for the first time. One marks Dow hitting 10,000 after an incredibly painful sell-off.
By the way, I've got another one in my desk drawer I just haven't framed yet.
So, but what struck me, not the lost decade. That's the obvious. The paper in 1999 was 75 cents a copy. The paper that you have out there, it's either $2.25 or $2.75 a copy. That's 10 years. And that's inflation, right? Like that's percentage-wise, that's some big inflation, man. And so I don't think that, because wages, based on inflation, wages have not kept up. I mean,
it's finally started to move up now.
Yeah, but they're not anywhere.
For 20, 30 years.
Inflation is over 5% right now, and wages are not that. And so up over 5%. Like, just look at the monthly jobs report, and wages went up 0.2%. Inflation is at 5.7%. Like that. You might get to where you want to be.
History, welcome to the 70s.
Yeah, you might get to where you want to be driving for Uber. But how long do you want to deliver someone's 99-cent spicy nugs from Wendy's? And I mean that with all the sincerity of the world. And I know there's a lot of people that have had cab drivers, like they put their kids through school, like bus drivers. transportation drivers. When you're a transportation driver, like for a city, you're a city employee, and there's benefits and it's a whole different world than this gig economy. And I don't know how long this gig economy goes on, because workers realize right now workers are in power, and
It's finally a great time to be a college graduate.
yeah, and kudos. Like I Danny knows I'm a populist when it comes to all this kind of stuff, and so
Like Teddy Roosevelt Jr.
I think that now is an amazing, like the people like Uber. Yeah, like people could say it's a great service. It solved the problem. Like cabs anywhere, cabs everywhere. The technology that came about from the phone to make it all possible. But how you're doing it, you're with the labor, right? Which is another show, another debate. I don't know how long it goes on. That's another topic for another day. Danny, I've got another thing before we hit stocks. We're going to hit stocks hard here in a moment.
Okay.
But the world is incredibly cutthroat. And the business deal that just took place yesterday is going to go down in history with one of the most cutthroat things that's happened since Schwab, old Chuck, and I don't know if this was Chuck or who's the CEO right now. Gosh, his name literally just left my head of Schwab. Walt Bettinger. I don't know whose strategy it was in 2020. It was 2020, right? No, Don, was it 2020 or 2019? Schwab introduced
2019.
2019.
End of 2018. 3 trades to make it
October.
Yeah.
So
make it so tough, and then
they kneecap Schwab. Schwab and it was Waterloo. Let's go with history. Waterloo was a big
defeat for Napoleon.
Yeah, but it was a slaughter, right?
Yeah, he got beat pretty badly.
They lured him in, right?
Yes.
Can you tell me who? Because I actually don't know, and I'm not being facetious.
It was General. I may need help on this. British General. I can't remember his name right now.
Why?
But he got hit, and Cornwallis is over here. But he got him to split and got him to he could divide and conquer.
Thank you. Schwab did that. Schwab, it was just Robin Hood and maybe one or two others doing these free trades. Schwab comes in. We're going to do it now too. The stock price falls of TD tremendously, and then like the next week, oh, by the way, we're going to buy you, and we're going to buy you on a discount, and we're going to consolidate this. And TD had nothing. They couldn't fight it. And so you get that big consolidation. So yesterday, Daniel, baller move. It's in sports cards. So just to give you an example of how big sports cards are on one platform, just one platform, eBay. So eBay released a report. In the first 6 months of this year, January through June, $2 billion in sports cards have been transacted on eBay. That's some pretty good moving, right? And eBay takes 10% of most sales. Okay, just in general. So that's some big money. And so Fanatics. So what makes sports cards valuable are the licenses, and the licenses get complicated. But I have to read this, okay? And it's just like 2 seconds here. In sweeping reordering of the trading card universe, unions representing players in Major League Baseball, the NBA, and the NFL have struck exclusive agreements with a new company controlled by online sports merchandise retailer Fanatics. So the deals break the grip that incumbent icon Topps has held on the baseball card market since the 1950s, and the basketball and football players have deals with Panini America. So Fanatics, which is run by Michael Rubin, he's the chairman now, he's an entrepreneur. Michael Rubin started out in this business of selling things, right? As a kid in the suburbs of Philadelphia, he would go around to the ski shops after ski season, take all their surplus, put it in a storefront, and sell it himself. From there, he built some online businesses. I believe they were bought by eBay, eBay let him languish because eBay. I don't think eBay was well run there for a while. And he brought him back, created Fanatics, which is if you want an NFL T-shirt, or any T-shirt from the sports leagues, you're most likely getting it. And what they do is they also print on demand. So like when the Eagles win the World Championship again, right? Like that night they'll have Eagles T-shirts. So anyway,
47.
I was about to say 30, 31.
Yeah.
oh hey, real quick pause, Don. Let's do the last in a series
shame.
of our Tim Tebow updates.
Wow.
Oh,
Go ahead, Don. Tell
He's
the
Thank
folks
you,
what
Don. Thank you, Don. Thank you, Tim.
Well,
he was deemed as one of the 5 worst athletes on the Jaguars roster. So in the cut down from 90 to 85,
there's a clip
did
of
not
that.
make it.
There's a clip of the. I felt bad for him. He like threw himself at a block against the Colts, and
Yeah.
man, but I mean, what an amazing journey! Like whatever people think, I don't know.
He still did more than most.
He's so beloved that he had. I think when he got cut, he had the #1 selling jersey in the league. It's amazing.
After he got signed, he did. Yeah, I don't know
Yeah.
if he still did after he got cut. All that, but
That's pretty amazing, man.
But Monday night, tune in to see the 2021 future offensive rookie of the year, Trevor Lawrence, lead the Jaguars against the Saints.
What about Etienne? You don't
Their
think he could
preseason
win it,
game.
Don?
What's that? What's that, Hunter?
Etienne, the running back that played with
it'll be
Trevor at Clemson.
Lawrence.
Okay. He looked pretty good. I watched him a little bit.
By the way, Guns and Sweetums are officially the number 10 entry into the Stanley Fantasy Football League.
There you go.
Let the games begin.
There you go. Okay. Well, no, we'll shift our updates to that.
Now that's an update.
When's the draft?
The Tuesday after Labor Day.
Okay, so we'll just get those updates. We'll get some draft prep next week, and then we'll just get updates throughout the season.
I'm afraid to say this. I almost cringe, but I have a friend and a client that actually has a sport. He's had a very big sports show in Dallas, and he's heard our podcast and said, "Hey, if you ever want me to come on and talk about the sports and the contract, what's going on?"
Who is it?
Well, I can't.
Why can't you say?
His name's Tim.
Yeah, we'll bring him on for parlays.
Is he right for the Dallas Morning News?
Football season starts.
He had his own radio show and magazine. Oh, he may write for the Morning News. I don't know.
Okay.
Tim Matthews.
Guns and Sweetums have the number 1 pick, by the way.
Oh,
really?
That's right.
Oh, hey, hold that for we're not going to discuss it. I want to know next week because there'll be stuff. I want to know who the draft. Okay, so all 3 unions.
Which one of you is picking Tim Tebow?
Well, that was our initial plan. Now we're looking at Carson Wentz with our number 1 overall pick.
You guys really have
You guys laugh, but when Carson Wentz wins comeback player of the year and the Eagles get a number 1
player
draft
of the year. Oh my God!
Yeah, this is all part of the plan, Danny. He dropped off so we could come back.
He's lulling him into a false sense of security.
He's the Muhammad Ali of football. He's got a rope-a-dope going on.
Did he just get the injury? Is that he just got this preseason foot injury so that he could add to the comeback player of the year story, Tim?
Listen, you guys know this. This storyline was all written before this season. It's like WWE. So they wrote the whole storyline. Listen, they already know who the Super Bowl winner is going to be. Come on.
That's right.
Y'all know that. All 3 unions will have stakes. So this is the new thing. And this is what players and people who are so-called influencers, right? They're not just getting paid anymore. They want equity in the company. If they're going to help build the company, they don't want to just get paid. They want equity in the company. This is where the whole world's heading, right? And there's going to come a time where a player like Messi just got released from Spain. There's going to come a time where you're going to see, and it's going to happen in Europe first because we're backwards here for some reason, where a soccer player is going to get a piece of equity of the team while he's there. And then when he leaves, he'll be forced to sell his equity to the team. And if he did his job, right, if the player, he or she did their job, the player will have boosted the cost basis of those shares in that equity. It'd be interesting.
So where are you getting
Not
that
the
from?
cost basis,
Is that like
the
a real
value.
No, that's where I think it's headed. I think that.
I mean, that's interesting. Just an interesting incentive for like a LeBron James.
Yeah, this isn't. I think a lot of people have this thought because Messi's contract. Like, if you read what happened, Messi's contract ruined the team in Spain. Like the team in Spain is worth billions, but they're like financially decrepit because of this contract and all this money they paid to Messi. Whereas if they had given them like half the money and equity in the team, it would have worked out a lot better.
And it would have turned it into capital gains versus income. Helps the player.
And there we have it. Yes, folks, because the tax laws in Spain are like here.
Well, if they're like
So all three.
I have a quick question
Go ahead.
for Don. Going back a little bit, is there going to be enough room on that trophy for me and Hunter?
You know what? Let's worry about that after you at least put up a couple of points.
Are Sweetums actually a
Alex.
candy? Sweet tarts are what I'm thinking of. Sweet tarts are those
yeah,
little
Sweetums.
discs.
No, Smarties. Or
Smarties are what I'm Smarties.
I remember those.
Smarties and Sweet Tarts, same candy family.
Really? So we just
it's all
mix them,
Mars.
call them Sweetums. Anyway.
They're different.
Anyway.
They're similar.
All three unions will have stakes in the entity that now control the most lucrative sports trading card assets in the country. MLB and NBA have struck deals. I'm going to get into, Danny, this is going to wreck a SPAC in a moment. Okay, I'm going somewhere where this is about to wreck a SPAC. So the deals figure to have a major impact on the fortunes of old stalwart of the sports cards business, Topps, and a newer one that is charging deeper into it, Fanatics. The players in the leagues plan to leverage the same expertise to turn Fanatics to go-to online retailer for sports gear. Here's where it gets interesting. So Topps, the longtime incumbent in baseball, is in the process of going public. I don't know if you remember this. They're in the process, like right now, they were due to vote this coming Wednesday.
Oh,
So Murdoch Capital Acquisition Corp. 2 is a SPAC, okay? And what happens is the members of the SPAC, the people that have bought the shares of SPAC, they vote on the target acquisition. That vote is was to come on this, I believe, this coming Wednesday. So they're just about to have this vote. And behind the scenes, Fanatics, Michael Rubin, they're going to the leagues and saying, hey, these licenses come up, we want in. Name your price. The leagues say, we want equity. We'll give it to you. What do you want? Danny, the value of the deals to just one of the leagues is estimated to be worth, by the time the deal is done, is estimated to be worth $2 billion. Whether that comes to fruition or not, it's a whole different story. For the players, right now, that's the MLB. For Topps, Topps is only paying the MLB Players Association, the MLBPA, $20 million this year. And here comes Fanatics going, we got money. What do you want? We want equity. We're going to give it to you. So not only so Topps deal comes up in 2025, 2026. The NBA deals come up a little bit sooner. NFL deals come up a little bit sooner. So Fanatics just says, screw you guys. We're taking them all. They have just changed a major sports business, and they've given more power. I mean, the NBA is a power. The players have the power. Not so much in football or baseball, but more so with the NBA. But listen to this. So long time incumbent baseball. Okay, the deal with Murdoch Capital Acquisition Corp. Valued the combined entity at about $1.16 billion. The company said when they announced the deal this past April. Topps released its second quarter earnings 2 days ago on Wednesday, announcing that sales had increased 78% and it raised its outlook for the year. Fanatics, meanwhile, has emerged as one of the most aggressive forces in sports merchandising. Yada yada yada. Now, by the way, Fanatics is valued at, it's a private company. Just took on more money the other day, right? And valued at $18 billion. Then this morning, this news breaks. With Fanatics MLB deals, Topps now becomes a shell of itself. Mudrick Capital. I've been mispronouncing it. It's Mudrick. Mudrick Capital, which was supposed to bring Topps public, has informed the SEC this morning that it will terminate their agreement. Holy hell! This is
chart.
This is real money. You got to throw me the ticker of it.
Hunter throwing down the gauntlet.
MUDS. It's just pretty interesting to look. I mean, it's back to being worth what a SPAC is worth, right around $10.
$10, and they're going to redeem their shares, so give us our money back.
So this timing, by Fanatics. I want you to know what they did because this is so effing cutthroat. This deal by Fanatics announced a week, not even a week, before they're going to vote on this consummation of a marriage, right? Like, can it go through?
You'd rather find out before than a week after.
No. It's made Topps worthless. So imagine, Danny, that you have a company.
But if you put the money in and invested and then found out a week later, you lose all your money.
Well,
this way they can redeem their principal.
Well, this negotiation by Fanatics is they're going to write, if it's not a book, a case study. Like these tactics right now, using the leverage of free trading by Schwab and TD, using this leverage of venture capital, because Fanatics just got an influx of capital that valued them at $18 billion. They used that money to go negotiate with the leagues. They turned it around like this, and they just took a company that was going to be valued at one. I mean, Danny, on Wednesday night, a week before you're going to go vote on this deal, you're an executive at Topps. Now, they were probably, they know. I don't know if the Topps executives knew that there was a negotiation going on in the background. Like, I don't know. Do you start negotiating those things? Because the deal doesn't end at 25, 26, like 2025, 26. We're at 2021. So when does that cycle start to start renegotiating licenses and that thing, right? Mm-hmm. It doesn't matter. Like if it's 18 months, if it's 36 months, it doesn't matter. I don't think the way I'm getting at it, the way I'm reading it, I don't think Topps knew that this was a negotiation.
No.
It's almost like they weren't invited to it. No one has written anything like Topps was invited to make a counteroffer and they didn't. Fanatics just went behind closed doors, said, hey, man, what you got?
Fanatics is going to end up buying out the assets of Topps.
For pennies on the dollar. And it's the same thing. Schwab has written the playbook here. Schwab wrote the playbook on how to leverage. You know, like they leveraged, Fanatics leveraged venture capital, Schwab leveraged free trades. I mean, this company, if you're an like Michael Eisner is one of the Mudrick is part of Topps. Like Michael Eisner has something to do with Topps. I don't know if it's through Mudrick or that Michael Eisner bought Topps. They literally took a company that was going to be valued at $1.16 billion and made it worth zero. Because the only license I believe Topps has left is like soccer. I'm not even sure which league. Like that's a lot of money, dude. Like they just literally.
So Panini is still safe though, right?
No,
because they're NBA, NFL, right?
Yeah, the NBA's going to Fanatics, NFL's going to Fanatics. Like this whole so now, Topps can choose to sell itself to Fanatics, right? But so Panini right now makes baseball cards, but they can't print team logos. They only have a deal with the Major League Baseball's Players Association. So when you get a Panini baseball card, it just has the player, not the not the team logo. Topps has the license with the MLB to use the logos, and with the Players Association to use the likeness. And so, sorry, I can't do two things at once. So all of this is interesting. Like they literally just capped off a company. I don't know what happens to Panini, Hunter. I really don't. They have hockey. No, Upper Deck has hockey, which is the least popular.
No matter
sport.
what happens, there's still a good sandwich. I mean, when you compress two pieces of bread and in between the panini maker, it's but that going.
That's capitalism.
Oh my gosh! This
job
is
creation and destruction. It's still the best system we've ever found.
Like I can't imagine. It just sounds like the way this all happened. Like Topps was running around fat, dumb, and happy, and before you know it,
maybe rested on their laurels and didn't.
I don't know. Like it really causing the question. Like when you're like these, I don't know what the negotiation cycle is, but it's almost like running for president. Like, does anybody really ever stop running? Like it used to be back in. Gosh, even when I was younger, like the presidential election cycle didn't start till what, year 3? Like you saw some challengers starting to emerge, and at the end of that year, that third year, throwing my hat into the ring, and then you campaigned for 12 months, or almost 12 months, before the election. you got people and kind of announcing now I'm running for president, right? And old Joe just took the helm, like 7 months, 8 months ago. And so I guess if you have licenses, man, you should always be negotiating.
Oh, absolutely.
Yeah.
Businesses continue all the time.
Well, this is
upgrade and adapt and change, otherwise you'll get left behind.
This is illuminating. I mean, they just took a SPAC deal right off of it. Speaking of SPACs, Richard Branson's been selling off some shares of Old Space SPC. I want to look at Mudrick real quick. MUDS, you said?
I think that's the one he said.
Yes. Sorry, I'm looking at some other SPAC charts at the moment, but yes,
Look,
MUDS.
Look at that. So they announced in April. Here we go. They announced in April right here. We're buying tops, boys. I'm of the school of thought that somebody always knows, but a lot of SPACs have gotten crushed. So now, I guess the good thing for Mudrick, the bad thing for Tops, they've lost their marriage is now over. The couple that they were fiance. If you're fiance is a gender neutral term, right? Like fiance isn't. Yeah. So they were fiancés together, right? And now the marriage ain't gonna happen. And so Mudrick can go back to find another suitor, for their capital.
Another deal, yeah.
Another deal. Tops is screwed. And by the way, just a little bit deeper, because it doesn't just transcend like this little entity. How cards are distributed, like big part of Walmart. Now it's not like grocery for Walmart or Target, but they sell a ton of these things. So everything from distribution, how cards, now you have, and it's interesting if this is going to go through, if someone steps in like a government entity and says this is a monopoly, because how cards are distributed, there's like this whole hub and spoke network of, they get sent to distributors. The distributors then send them to local card shops. Right from the manufacturer themselves, they send them out to Target and Walmart. The whole. I mean, this is going to affect so many people downstream. And does it affect eBay's They did $2 billion of card transactions, right? So, do they move digital? Like, is it all going to be NFTs? Like it really super interesting stuff moving forward. And so, just crazy what's happened. Let's talk leading stocks. Ready to do that?
Sure.
I want to, and
Yes.
look, yes. So here's Stock Nerds Market Lovers. What I do is I craft the show. By the way, the whole thing about the frogs and not how I planned the show. That was just off the way. And he said the word history. I'm like, I'll show you those. I craft the show in a way that it doesn't seem like it right now, that I try to involve everybody with some educational banter. Okay. Then what I wanted to start the show was about. I'm going to play the game, What's the Leading Stock? Okay. I'm going to start off, probably say some inflammatory things. Try to get Don's the head to pop off its neck, like that Origin rocket. And then have Hunter and Alex try to clean up the mess, and then Danny try to be the voice of reason. So here we go. We're going to play the game. Are you ready, Daniel?
I'm ready.
We're ready. Okay, I'm going to start.
By the way, real quick, more SPACs are asking for redemption, their money back, and failing just in the last couple months.
Really?
Yep, quite a bit.
Hunter, what
It's
SPACs?
not as bullish on
Hunter, what SPACs were you looking at, brother, that are in decline? Did you have any off the top of your head?
Can you say that one more time, Tim? Sorry, I was
researching SPACs.
You put them to sleep, Tim.
Which one? So
no,
which ones are we wanting to look at?
No, I was wondering which SPACs are getting destroyed. Which ones were you looking at?
Butterfly was one I was just looking at. Butterfly has gone from 30 all the way back to 10, and more recently from 9 up to 15 all the way back to 10 in the last like 3 months. I'm just going through some of these names that used to be leaders.
Yeah.
Like QuantumScape from 132 to 19. What's the other?
Well, think about
charge point.
Think about it for a second. So here's the NASDAQ. The NASDAQ on an hourly chart. So the NASDAQ has changed, right? This isn't like trying to I'm not patting myself. Because I was actually wrong. Like I thought when the jobs report, the NASDAQ peaked on August 5th, right? Hit a new high on August 5th. August 6th is the Friday the jobs report comes out. Rates spike. And I thought that you're about to enter this rate cycle that would drive the NASDAQ lower. And maybe you'd have some churn with the S&P and the Dow. The Dow would rise again. And the NASDAQ would underperform. I was right about the underperformance of the NASDAQ, but I was wrong about the reason. The NASDAQ, you can see on this hourly
Because rates
chart.
came down, not up.
Yeah. And so I think it was this Monday, we had the morning call, and I was looking at the 2013 timeframe of the NASDAQ when they started last talking about tapering, right? And over the weekend, this previous, 5-6 days ago, the Fed sent out somebody to put some taper talk out. Like they wanted it out in the news cycle, but by the way, it got dominated by what was happening in Afghanistan. Like most people probably missed this taper note, because of all the footage that
Or
was.
they don't believe the Fed. But
Well, one of the and so, but you can see that the Nasdaq is clearly underperformed, and so I am constantly looking for. And I'm bringing this up because I think there's a process people should employ. I believe screening leads you to leadership. Like the market's always churning, right? And this market's been incredibly difficult because markets and it really goes back to this chart with the money supply because of all the money that's been injected into the market, okay? That's like if someone says, well, what's the cause of all this change? It's the money, it's the M2, it's the money supply. So the market churns, right? Like now the S&Ps don't sell off. But they don't really go anywhere. But then you've got some leadership in some obscure field out in Kansas, and then the group that was just leading over in Washington, is now falling, and that group in Kansas is leading, and you get this churn. It's just constantly happening, and the only way to uncover it is to screen. And so I offered up to stock nerds, I believe it was August 6th, or yeah. Hey, here's a screen, like an 821 screen. I'll give it to you. If you still want it, I'll send it to you. Of how I go through, I think you should screen every day, how I can identify which groups are leading, right? And then like last week, I was like, it's really striking that XLU is leading, like has been leading, and those types of stocks, and how the Nasdaq has been lagging, and so and then the Nasdaq had a little bit of a sell off, and now it's trying to come back. We'll see if it does. This is an hourly chart, make it up this trend line. So then I started going, let me just show people what's been leading. Because if you watch the news or you read, like the media, just in general, media talk is dominated by like just a handful of stocks. And I'll prove it to you here. Let me just show you my phone. And so like when I want to know what's going on in the market, Zach, I'm going to hold up my phone to the camera in a second.
Yeah.
So we can do these stocks too. So here's, like, if you can see this, I've got the intercorrelated assets on my phone. It mimics this. It mimics, I want to know what's going on. I can tell you what's going on in the market by looking at the intercorrelated assets, not just like the NASDAQ, the S&P. I get that, right? Like anyone, of course you can tell what's going on in the market. You're looking at the indices. No, I want to know like the ticks. I want to know the ADD. I want to know here, like I want to know bond prices. I want to know yields. I want to know what the metals are doing. And Don wants to talk about the dollar
and interest rates.
Yeah, I want to know all that stuff because I can then format a picture in my mind of what's taking place in kind of why. And it helps me go forward to make sense of what my screens are turning up. Does that make sense? Mm-hmm. And so then it gets to the question, well, how do you graphically show this to people, like this process? And so then I want to come here, and this is where I'm gonna take all this stuff off. Okay, except like what's the most boring thing I could think of? I thought of XLU and XLP. So these are comparison charts. We're going to do 2 time frames. Okay, I'm not cherry picking. I'm going to show you what I was just looking at, and I'll ask the fellas. We're going to do 2 time frames. Here's 8/5, the day the market peaked. Don McLean once said the day the music died. This is 8/5. Okay, Little American Pie, right? Which is a history song. The whole thing's a history song, right?
Yep.
Zach, familiar with the American Pie?
Of course.
Yeah.
It's
Did you write the Book of Love?
Who's it about? Buddy Holly?
Yeah, the whole Big Bopper playing that died.
Yeah.
820 Richie Valens. Yeah. So now today's 820, 805. The the day the music died for the NASDAQ. So, but look at XLU in that time frame. Why are you looking at me like that? Because
I was smiling, but it wasn't Richie. I was trying to think, who's the other guy that died in another plane crash?
anyone from Leonard
He was
Skinner?
on TV too. He was on had a sitcom.
It'll come to you. It's just
Okay.
forward to that when it does. So look at XLP. I'm like, XLP is consumer staples. I'm like, what's more boring than utilities and staples? And look at this in this time frame. Utilities are up 3.5%. Staples are up to almost 2.75%. And then let's look at that compared to Amazon, which has had a reporting period, I believe. No, not since then. I'll go back a month and then it would have had a reporting period. Amazon's down about 5.7%. You can do it to the NASDAQ. You can do it to Tesla. Like, what's Tesla done in this time frame? Tesla's down 5% in this time frame. But the names that dominate the news, and by the way, they dominate my watch list too. Like, I've got just a running list of tickers, of intercorrelated assets and tickers. And the first one's Apple, Amazon, Netflix, Google. Like, the ones everyone talks about, because those are the big five, the big six that kind of dominate everything. How about Apple? Apple's made a tremendous run. Let's look at Apple. Apple is up 0.6%. Apple has underperformed the utilities and the staples. And I find all of that to be interesting, right? And so then let's change it, though, because this is just, did you look it up? Do you know the answer?
No, I was texting my wife.
Awesome. And so this is just like, this is not even a month. So let's go back 1 month, okay? So we're going to change this to 7/20. And look, time frames are subjective. I get it. But we're going to do 1 month, the day the NASDAQ peaked, and we can add some other stocks in there. But like, well, what about 1 month? Because this little period doesn't make a market, right? Well, look at the outperformance of XLU here. 6.7%. Amazon down almost 11%. XLP up 3%. Tesla down 2.5%. Apple up 1.22%. And so there are stocks that have and look, this isn't like I told you. I was really shocked because I think when did Nvidia split?
NVIDIA split was 7/19.
7/19. Okay, so so we're gonna catch the day after the split here. We can set it back to, but like Nvidia was shocking to me because I thought it would be up more. In this month, it's been up 10.32%. But if you look at Nvidia and when the NASDAQ topped, it's just following the indice down. And so I contend in what I offer, and look, take it with a grain of salt. There's always going to be leading stocks in an indice. But when the NASDAQ's been lagging. Like, let's put the NASDAQ up here. Let me take somebody off. We'll just get the NASDAQ in here against. Do I have the NASDAQ? Yeah. Here's the NASDAQ. The NASDAQ's up 2.33%, and utilities up 6%, and it's even slightly underperforming the XLP. I don't think you want to go balls to the wall in that indice that's lagging, but you have to know it's lagging, right? Like, and you have to have a metric to help you understand that it's lagging. And the only way I think you can do that is by screening. Like, if you screen every day, and a lot of the stocks in a particular indice, whether it's the NASDAQ, if they're losing their 21 exponential moving average, right? Like, or if you're screening for a down cross, like, is the 8 coming through the 21, or you just want to know if the 5 is coming through the 8. Is it the start of a slide? The more you can do that and ferret out that type of information to find the weakness or find the strength, I think the better off you're going to be. Doing the exercise I'm doing right now with you isn't helpful. Like, it's just showing you, like, how do you get this kind of leadership? Like, how do you understand that utilities are leading in this one particular moment in time? You got to screen. And so, but I'm curious, Hunter, give me a random stock right off the top of your head, anyone, or a couple. Let's do a couple.
Before we do that, can I make a few comments in relation to kind of what you're looking at there?
Yeah, of course.
So, to your point, XLU, XLP, right? Utilities and staples are pretty much your most defensive sector ETFs for the most part. XLRE, you can maybe throw in there a little bit as well. But those are your defensive sectors. So you usually see those act well when people are nervous or scared or concerned about the future, which, to Tim's point, is evidenced by the consumer sentiment angling downward. Obviously, there is some fear. But also, for the better part of the last month, really more so the last 2 or 3 weeks, we've had an elevated put call ratio pretty much every single day, above its average anyway, closer to 0.8, 0.9, and 1, more or less every day, sometimes over 1. And you've also had the fear greed just kind of stuck in a 20 to 40 range today. This morning it was at 20. So for one, I think you've got just overall fear and concern driving some of that move. And then additionally, there's yield on XLU, XLP, XLRE, and you can't get yield anywhere else. So I think it's part of it is fear / flight to safety, and then also part of it is the attractiveness of the fact that like XLP has a 2.5% dividend yield, XLU has a decent dividend yield, and it's more attractive than treasuries, it's more attractive than CDs. So that's something to think of as well. I mean, if you look at XLRE, over the last year, it's been really strong as well, or even over the last month.
Over the last month, it's underperforming XLU. I didn't know that.
Yep.
But
I'd say that's because there's been more fear over the last 3 weeks to a month or so. Honestly,
everything you said is true. But to be helpful, like because we're a show that like, and I hesitated to do this drill. Like we're a show that has to look at the information today to try to make decisions for tomorrow, right? And the charts tell us that, like price tells you that. But how do you get people to take action in the right direction? And it really is it comes down to that screening process. Because some people, you might see that, like it's one thing if you screen like, wow, like all these utility stocks and like Colgate Palmolive, Procter and Gamble are working and Tesla's not. You have to be able to look at the instruments, like look at price and actually believe that it is telling you the truth, which is hard to do because when you're inundated every day, because it's the sexy news. Like in our world, the sexy news comes from tech, right? It comes from Apple, it comes from Facebook. Another. How many?
You got to screen and assign probabilities. Yeah. You got to screen and assign probabilities because more often than not, huge percentage of the time, those stocks are going to outperform XLU and those defensive stocks. So how defensive do you get, and for how long before you switch gears?
You just have to screen. Again? Like if Apple and Facebook, like if they start coming back in vogue, like you have to have a mechanism on a time frame that makes sense for you.
Right.
If it's a daily, if it's a weekly, like maybe you're like, Tim, I want to know on a 4-hour basis. Okay, great. But it has to work for you. But you have to have a mechanism that alerts you to this. Telling you a month ago that the utilities started to lead isn't helpful. Our utilities are going to continue to lead until they break their until they break their 21. But understanding the market you're in right now is, like people can talk about like, and this is what happens. Like I don't tell people what I do for a living because I don't want to get in social situations and talk to market. I just don't. I don't want to convince anybody of anything. I don't want them worse. I don't want them to do it to me. And so, like, let's take real estate off here. What's Facebook over this month period? Did I not check Facebook? Not on there? Sorry. So
it's below, Tim.
Oh,
you got it. That's fine too.
Yeah.
You see it down a little bit.
Thank you, brother. Facebook. 4 point.
Tim, will you throw ARKK up there?
Oh, let's do that.
For looking purposes, and also throw up XBI.
Sure. Oh, biotechs and Kathy Woods.
I think that'll show you the weakness.
Yeah. And so you have to have a mechanism that gives you, XBI down 5 over a month, right? And so, but those are the market changes that you want to be aware of. And like everybody at Revere has their screening process to find leadership, but to be able to then, like, be able to put it together. Like if the big five are underperforming, like the big, the top five of the NASDAQ 100, if they're underperforming, right, you want to know that because that'll tell you, well, where do I give my attention to? Do I put it side? Well, what's the S&P doing? Where maybe it's time to just be S&P. What's the Dow doing? What's the Russell
Or
doing?
hedge or raise cash.
Something, right? To alert you because what happens is you get lulled into this buy the dip, buy the one day buy the dip isn't going to work right now. I mean, come on, buy the dip is absolutely what's happening in the market.
Yeah, we're only a few percent off the high.
Yeah, exactly. But understanding the change, see, because the indice can float, but the stocks you're in at home can just and to be able to spot that change and not throw good money potentially after bad, or to be able to have a mechanism to harvest profits. And I think that's what I'm trying to dig at here. And I don't know if I'm doing a good job of it, but like I use the ATR chart. So let's do, Hunter, I'll come back to you in a second. Don wanted to talk about the dollar. And so I've got UUP somewhere in here, Don. Just give me a second as I find it and I take off Facebook and ARC and biotech. And Don want to talk UUP, and I'll let Don do that. But he wanted to do it on an ATR chart, which is where I'm going to go to now. And so when you're looking at, and for me, how I use the ATR charts, it's probabilities. Like I think of the markets in terms of probabilities. UUP. I can do DXY over here, Don. I'm sorry. DXY. And so Don's like, hey, market. I'll let Don explain why he wants to look at the dollar. But when you come to this 3 ATR or 2 ATR, I want to learn. 3 ATR, I'm thinking you're about to pull back. And just really quickly, most everyone's heard this explanation. Why? Because the mean, or the 21 exponential moving average, that's the mean, no matter what time frame you're looking at, whether it's a daily, a weekly, an hourly chart. When you're looking here, you're looking at the mean, but then you're adding that time period is +1. Another one of those periods is +2. Another one of these periods is +3. And so you can see a visual representation of, are we stretched? Like, are we overbought? So instead of letting people throw those terms around loosey-goosey, you now have a fact-based look at the situation, and you can make a determination. And I'm telling you that when you get +2 ATR, especially +3 ATR, you need to be thinking harvesting, or potentially, hey, like this might not work if it starts going below the mean. And so, Don, why did you want to look at the dollar?
That right where you drew with the pink ink right there the last time the dollar peaked.
Oh yeah, right there.
There was a show that we were doing, and one of the comments that you made is that you wouldn't be surprised if the NASDAQ started to outperform because the dollar was so extended to the upside on the ATR chart.
Mm-hmm.
Stocks typically move inverse to the dollar. And that showed a perfect opportunity for the dollar to start pulling back. And that corresponded with a decent run in stocks until the dollar bottomed there. Then you see the strength in the dollar, and that's corresponded with a bit of a weakness in stocks. But now we're back up to the positive ATR again at the +2 on the UUP. And if we start pulling back from there, that should be beneficial to stocks.
Yeah, look, it's options expiration. I'm sorry, Don.
Yeah, it is. What does that have to do with the dollar and the chart?
Yeah, there's a lot of movement in stocks today that aren't going to make sense because of all the premium that was sold, especially monthly SPY. A lot of stocks they sell this. Like I bet you, what's 785 pin? I haven't looked at Tesla price wise. I don't know what's trading at, but Tesla had a lot of open interest around 785. Stocks tend to gravitate to where the most premium is sold, and then they're going to do what they're going to do. But markets are very bullish today. And look at this little pullback in the dollar. Don's spot on here. And being able to spot these types of correlations, I think, is crucial because it allows you to take the intercorrelated assets of the market and understand that. So, like what Don's saying is, okay, if dollar were to stretch up to this third ATR, what do you think that does for the NASDAQ? Yeah, it's probably going to hurt it. If dollar pulls back to the mean or lower, maybe it starts another good run. But and how would you use that? Well, okay,
right, because on the other hand, if you drew a horizontal line from that top where you started over the two tops that we've had in the last couple of weeks, that's a cup and handle breakout. So very often, right there, and then a little bit further to the right, if you drew a horizontal line, you'll see the cup and handle breakout in the dollar.
Yeah.
But right, we're going all the way over to where you started drawing.
I'm
It's
sorry.
a big cup. Yeah. Starting,
I got you.
keep going right there. There's the cup. Keep coming up.
Yep.
And then the handle,
Yeah.
and then the breakout. Now, very frequently with cups and handles, the question is this going to be the beginning of a breakout and a change in trend on the dollar? Is the dollar going to continue to go higher? What I would look for is the highs, those last two highs that we made before the breakout, when the dollar pulls back, does that contain that pullback? Or is it going to fall back into the base and come back closer to the mean? And that's probably going to dictate a lot of how stocks are going to perform. Now, remember, typically August and September are seasonally the worst 2 months for stocks, and then normally we make a bottom in October and rally into year end. And we're very cognizant of that, but we don't make decisions based on seasonality. We make decisions based on how our individual stocks are acting. And since that peak on April 5th, it hasn't as much been an underperformance on the NASDAQ or the QQQ as it has been on the smaller, growthier type names that underperformed starting with the middle of February. For example, since 8.5, QQQJ, which is a mid-cap NASDAQ proxy, is down 3.5%. IWO, the Russell Growth, is down 4.5%. ARK is down 7.9%. FFTY, the IBD proxy, is down 3.5%, and PDP, a momentum index, is down 2.6%. These are the five that we focus on every day. Those five ETFs are what give us a feel for risk on or risk off on the overall market, particularly with mid cap growth and large cap growth, and to a slightly less extent, small cap growth. So underperformance, there's always regression back to the mean, and that works when something's extended to the upside and to the downside. Apple and Google have actually outperformed the S&P 500 since this top on 8.5. So it's not necessarily the big cap NASDAQ stocks that are lagging, but it's the growth names that we track in, and we see this in our portfolios. We topped on 8.5 also. The NASDAQ 100 knocked on the door to try to get above that 8.5 high several times, but couldn't do it. And then after lagging, we had a big gap down at the open on Thursday, and then a very strong rally off of that, which is very similar to what happened on 5/19. The last time growth was underperforming, we had a little bit of a rally into resistance. We gapped down, we closed at the high of the range, and we went on a stellar run over the next 2 months. I'm just saying to be prepared for all outcomes. We've gotten significantly more defensive over Monday, Tuesday, and Wednesday of this week as some of our stops got hit, but we're looking at a lot of low risk entry points. We had a hammer, which is a gap down and a close near the highs in the market on Thursday. We're seeing follow through strength on Friday. We actually had two closes on the indexes, the S&P and the NASDAQ 100. We had two closes below the 21 Wednesday and Thursday, but we've gotten back above it today. Any sell-offs intraday on the NASDAQ on Friday have all been met with buyers. So we're going to close the week back above the 21 if over the next 2.5 hours, as it takes us to 4 o'clock Eastern time, if the strength persists. And then what we want to see is when we pull back to the 21, is that going to hold or not? And that's going to dictate our next steps in our portfolios. We've got a list of leaders. We've got low risk entry points. The best stocks we're still in because we didn't get stopped out on them. The ones that underperformed, we did. We came into the week with a beta almost twice of what the S&P was. We're going out about 1.2. But the leaders, the leaders that we primarily had been the biggest part of our portfolios have held just fine. That's NET, which held the 21 nicely and is bouncing back above it today. NVIDIA, which had a nice shakeout after earnings and is now held its 21 and going higher. And Datadog, which has pulled back a little bit over the last couple of days, but is still holding its breakout. And what we've seen ever since the 5th, when we topped, is that a lot of these leading tech stocks have made no further progress. They're just going sideways. It's said that sometimes they either wear you out or scare you out. And what happens next week, as far as whether this week's lows hold, is going to be very crucial. Like I said, there's a lot of good setups. There's been rotation. Healthcare has been extremely strong. Staples and utilities have been strong. But those trends really don't persist in staples and health and utilities unless the market is really going to wet the bed. So we'll be looking, as always, at which sectors are leading. But as of right now, if the spike lows from Thursday hold, which is right above the 50-day moving average on the NASDAQ 100, that's a positive sign for the market. We've also got sentiment being overly negative and the put-call ratio being high, which are also contrarian bullish signals for the market. So the key is going to be Thursday's lows and the 50-day moving average holding.
And so how...
Hey, Tim.
1 second. So I'll get to you in 1 second, Hunter. So if you're at home and you're like, well, how do you take all that information and make yourself or save yourself money? If you're screening for something like an 821 crawl, like the 8 coming, the smaller moving average coming, the shorter moving average coming through, the faster moving average coming through the longer moving average, the momentum is lost. So if you saw staple stocks, Procter & Gamble, utility stocks, start fading, and then you took the dollar, the work that Don just did with you with the dollar, and the dollar's coming down. Like that's presenting to you that's presenting to you
risk on
information that you need to be able. I think you need to be able to process. And when you're able to actively screen like that, and then use a piece of the intercorrelated assets like that, that's absolutely going to help you stay on the right side of the market. Because when someone says there's always a bull market somewhere, like some days the markets just suck, right? Like because of the ETFification of the markets, everything gets drugged down. And if you could spot a month ago that utilities were about to lead, it might have saved you from an erroneous purchase that's going purchase that's going nowhere of equities, or
conversely getting in early when
Yeah.
it starts to set up.
Yeah, and so you can take what Don just said. Said, okay, dollar, like, okay, the things that we're leading, staples and utilities, they're starting to break down. The dollar's coming back. Maybe I can take some small entries back into the NASDAQ. Oh, and by the way, it's holding the 21, so it's above me. Like, there's all those little pieces of information. And then conversely, if they start breaking, like, utilities are accelerating, and the market's not holding the 21, and the dollar is,
You might hold off on a buy.
yeah, like you just be. Danny has this phrase, and I'm going to butcher. It's like you're playing yesterday's. What do you say to people all the time? You're playing
Plays last Friday night's football game.
Yeah, you're playing last Friday night's football game.
You gotta play next Friday night's
and
football
drills.
game. But if you don't understand what you're saying, what we're saying here, reach out to me.
I'll give
Reach
it to
out,
you.
and I'll explain it in a little more detail, because you really got to understand what we're talking about. I mean, it will really help you, because if you're an active person yourself and you don't understand these things, you're swimming with sharks.
Yeah,
You need to understand.
no, that's a
you're gonna be
truism.
active.
And so, like when I do this drill, gosh, Danny, I don't think we've done this drill in over a year and a half. Like I can't remember the last time I pulled this up and started doing this this particular setup. This is playing last Friday night's football game. But I needed to do this so I could then set up Don to talk about the dollar, then talk about how you actively use that piece of information. And he just didn't stop at the dollar. He said, okay, now I'm going to tie that into 4 different ETFs. Now I'm tying that into what is the NASDAQ doing? And that picture, that site picture for Don, it doesn't have to be your site picture.
Confirmation with a couple different indicators.
You want, but it's forward. It's forward thinking. It's not. This is revision. This right here is what happened yesterday. If you watch CNBC, go to Yahoo. This is what happened yesterday. I don't think that that's helpful. Being able to forward think is what I think we excel at, and which makes us different. But one of the factors that makes us different. And so, Hunter, I am sorry.
Sorry, one more comment. We didn't talk about interest rates either, and the big move in interest rates started with the strong jobs report 2 weeks ago, but we have given up all of those. That raise in rates in the 10-year has completely disappeared since that strong jobs report.
I view that as problematic because I go back to speaking of history, I go back to that 2012, 2013 taper time, and that's what happened. That was the playbook. The NASDAQ.
Well, they started talking about tapering, and everybody took them at the word, and the market started selling off, and then it started rallying again.
Yields went down.
Yeah, yields went down, and then the market recovered.
Well, yields went down, and the market sold off 10%. That's what happened in 2012, 2013, and that's so counterintuitive to what Don was just mentioning. Like, hey man, we gave up that interest rate, that yield raise, and that's problematic. And from if the dollar does move higher,
that is a big red flag if the market starts selling off on yield.
So just to drive this point home, and then Hunter, I swear to God, I'm coming back to you. Like, look at Don's video here on August 10th. Growth stocks pull back as rates continue to rise, CPI on deck. So, like, we're setting it up here, and then the next day, Pitbull low, NASDAQ sell-off brewing. That's a week from the NASDAQ sell-off. Like, we're taking the information, and we're synthesizing it for you, like 5 nights a week, into this kind of forward outlook.
We're trying to give you tomorrow's market today.
I knew you'd have something like that for me. And so look, go to revereasset.com. Find it on Daily Market Insight. Or if you're like, Tim, that's too much, I got a family. The podcast is absolutely, we've been talking about this. Like our S&P is going to crash like 2015. I still think that if in the right scenario, that's a possibility. Okay? I still think that there's some things out there. Doesn't matter what I think, though. Whatever's going to happen is going to play out.
Got to watch the market, see what they're doing.
Look,
everything else is just
our tech stock's going to flop like LeBron.
Economic forecast,
like our tech stock's going to flop like LeBron, and they did. Now let's see how they handle reclaiming the 21. Like it's just information. Like, it's dangerous to be on one side, like everything's bare, like everything's bullish, everything. Like, no, what information are you processing? And so I think we have the answers for stock nerds and market lovers. This is why people come to us as clients. And if you want to do that, by the way, stock nerds, market lovers, contact us, page at revereasset.com, 855-732-32. Want to talk to anybody on the team, you can absolutely. It makes us different. One of the other things, we actually give you access. Everyone at Street Advice, at stripmalladvisor.com, or you call. Yeah, like, well, what happens is
we should have got that URL.
They put you in a bunch of different mutual funds, and then when you underperform, you go to Bob Smith, and Bob Smith says, "Yeah, let me call up John Doe." And John Doe, they have no access to the mutual fund managers. They tell you that guy is bad. I'll put you in a different mutual fund. It's plausible deniability. Everybody, if they work at stripmalladvisor.com, if you go to a strip mall and you see an advisor, strip mall advisor, they all subscribe to the same theory, 60-40 portfolio, strip mall advising you, and they all have plausible deniability. Literally, in our shop, unlike some other shops,
we got accountability.
The buck does stop here.
Let's go to Hunter for accountability.
Let's go to Hunter for accountability. By the way, if you call,
no sports, Hunter.
Hold on,
we're just talking stocks. No sports.
If you call, yes, sir. You're gonna get Danny or Meryl. Does Meryl answer the phone now?
Yeah. Good.
No, I know, but I mean, I didn't know if you were taking 99% of the phone calls.
No.
Wow.
If they want to talk markets or strategy or whatever, I'll take the call.
Look how big you've gotten. Got your chest hair puffing out.
We gotta get Meryl on.
Yeah,
she's so sweet.
Well, next time Danny's out, we're gonna get what it's like to work with Danny, because I'm telling you, the Apple conversation that Danny had today.
Okay, Hunter, let's talk about stocks. This show's going to be 4 hours long if I keep letting them go.
The Apple conversation you had with Meryl was hilarious. Go ahead.
Would you pull up XLU on a ATR chart, please? I was
I
just
got it.
curious as to where
Oh,
it's at. It's got to be pretty close to the third ATR, I would
yeah,
imagine.
it sure is.
Okay,
Yeah, and I
interesting.
thought, and it did. It gave you that. It gave you that wiggle of a pullback, and it didn't give it up. And that's actually a sign. I've seen that enough times now. That's a sign of strength. I don't know. You know, it's one of those. It's one of those outlier trail up your stops type scenarios. It's okay. I'm sorry.
Yeah,
Go ahead.
something I noticed while we were looking at this is that XLU has not really closed below the 8-day exponential moving average in essentially a month, the
Yep.
time frame you were looking at. So maybe something to pay attention to is when the 8-day starts to roll over, or if you get a close or multiple closes below that on XLU, maybe as a indication that the trend is slowing down for a little bit or starting to turn the other way.
Yep.
But
It's also
in
ignored what interest
relation,
rates are doing with that
yeah,
steady uptrend XLU. Interest rates have made no difference to how the XLU is acting.
that's a good point. Um, as far as individual names go, I've got a few smaller names
Mhm.
that have some interesting business models that are at very nice risk reward points or very close to their 21-day moving average. I've got one big gap up and then one dirty 30 name to look at. Tim, will you pull up Unity Software?
Oh yeah, man.
So this is one of the former leaders of last year. IPO'd in September, was really strong into the end of last year, and actually kind of peaked out a little bit ahead of most growth stocks in the December to January area. But this is a stock that had a big gap up on earnings back above their 200-day moving average, made a second day higher high, and then made a higher high again on the third day. Tested the 200 and the 21 more or less on light volume and bounced off of it nicely. They were added to Swing Trader today, so that might be skewing some of the volume, but nonetheless, the price action is good. Bounced off the 200, got back above the 8. And this is a pretty interesting software company. I think I've covered it before, but just for a brief summary, they have 3D, 2D, and VR interactive real-time software platforms that allow you to collaborate and work with other people. Um, but and when you see that, you think, okay, well, that applies to like movies and gaming. But their software actually also applies to engineering, manufacturing, construction, automobiles, etc. So they have a very broad reach or large in market for their actual software platform, which makes it a little bit interesting. Beyond that, I've got three names that are not the most liquid, but they are getting more liquid and they're strong. Tim, will you pull up SPT? It's Sprout Social is the name of this company.
Good
And
looking
this is
chart there, Ed.
essentially, yeah. So this had a breakout on earnings as well, got above 100, has held the 21, and is now back above the 8 as well. So decent action today on Sprout. But this is a company to keep in mind for the future as well. I mean, obviously it's been strong now, but this is a one-stop shop cloud-based platform for managing all of your social media engagement, analytics, post, etc. And they have some pretty interesting customers as well. Roku and Shopify, Subaru, just a couple of companies to list a few. So a cloud-based company or software platform that helps you maximize the potential of your social media engagement, marketing, etc. And the next company is LSPD. These are all software companies, as you're going to see here. LSPD is a point of sale software company, similar kind of scenario. It's a all-in-one cloud-based platform, to handle all of your point of sale software, track your information, etc. Another one that broke out and has come back and is holding the 21. And lastly, RPD Rapid 7. This is a cybersecurity company, but it's another situation where you've got basically a one-stop shop platform with a suite of tools to build out and customize your security system for your company in whatever capacity that looks like. So it's just a one-stop shop to customize and maximize effectiveness for your software security, sensitive information security for your business. So anyways, three leading stocks that are a little bit on the lighter side in regards to liquidity, but are all very close to the 21 after strong moves and starting to consolidate. And the last one is a gap up here. This is Foot Locker, Tim, FL. This has traded about 1,300% above average volume, or 13 times more than the normal daily volume, at least on a 50-day looking backwards basis. So this is sitting right on the 50-day at the moment, which is why I bring it up. Gapped up to 61.50, has come back and is just sitting right here around this 59 level, which is also where the 50-day is. But that is the most volume that Foot Locker has traded, and they may end up surpassing it today. But the most volume they've traded since that 15.2 million day on 8/21/20, and more so than the previous big days going back to early 2020. So a strong move to get back above all of those moving averages too, at least for the time being. We'll see if it holds. But that's all I got, Tim.
Awesome. Alex, what you got, man? When are you going to drop another video?
Sorry?
When are you going to drop another video, Alex?
Well, market wasn't right for a video this week.
I think you should do, and I don't know how they. I think you should do like follow-ups, like how you handled the trades.
Do that.
I think that would be. I think people would like that.
Well, the last video I did, I'm still in the position on the line.
Okay.
It's holding the 21 EMA pretty nicely. This might be a good This might be a good spot for if you wanted to try it and you still haven't. This might be a better risk entry right here.
Oh, but you can also follow up on the evolution of the trade, like how you're managing it between the buy and the sell.
I'll help you out here, Alex. Evolution. And where you find Alex? Where do you find all those wonderful videos?
You can go on our YouTube channel, Revere Asset, and make sure you like, share, and subscribe. Press that bell notification on your phones.
There you go. Alex's videos drop exclusively on our YouTube channel. And so what I'm coaxing Alex to do, hopefully, you don't have to do it if you don't want to.
Yeah, I think it's a good idea.
Update the trades, like whether you're still in them.
Yeah,
you manage it ongoing.
Yeah, I think how you manage them. I think that's a great idea. Okay, anyway, go ahead, Alex. I'm sorry.
Yeah, so a little bit of a different than the themes I usually buy on. I usually like high growth tech stocks, but pull up this REIT, BNL. It's a little bit of a less liquid name. So this Broadstone, they're actually out here in Arizona too. They have apartment complexes, what have you. That's telling me something right there, that chart. This is a nice cup and handle base. It's pulled back to that 21 EMA. I have not bought it yet, but it's on my like top 5 new ideas to try. That theme could continue for a while. I don't see real estate really slowing down. Houses are still being swooped up, at least here in Arizona. I don't know how it is in Texas and Florida, but it seems to be a very hot theme. And
funny you should ask. Dallas Fort Worth market has summer chill. We dropped 20.8% at the DFW Metroplex. Dropped for the month of July.
20.8% what?
Of sales.
What?
They fell.
I think part of that is they're running out of inventory, though.
Well, yeah, you can read the article. I'm just the only other area to fall as much as Dallas was Salt Lake City.
Well, that could benefit them. I mean, their rental properties rent rates are the prices of rent has gone up significantly across the country.
Yep.
So they'll capitalize either way. The other stock I want to talk about, we do own in-house. I want to talk about the price action of it. Is NVIDIA. If you could pull up, it doesn't matter, a daily or an hourly chart of that. I want to talk about how it acted around these earnings with its 50-day moving average yesterday. In the morning, it sliced through it, but then it came screaming back higher throughout the entire day. It closed just around 200, and then we have a follow through today with volume. The other thing is, back on July 19th, there was a big volume day, and the stock came back above off the 50-day. So that's twice now that it's come to the 50-day and shown significant strength within a base. That is, to me, if I've seen a buy signal on a leading liquid name, this would be it. I bought calls this morning on this in the beta test portfolio and for myself. I bought the $200 strike September. I gave myself 1 month. I figured it's going to be a few days run. I usually sell when I get about a 50% gain. I trim down, take some profits, about 50%. and then I'll see what it does next week. But right now, I got my eyes lasered in on NVIDIA. I think that this is talk about liquid leading with the fundamentals. This is the name, and that's it for me for today.
What's your criteria for selling it? Like if the calls languish or a premium comes out of it?
Yes, that's a good question. So my max pain, if unless the stock gaps down, of course, the next day, you can get unlucky on options. But 20% loss max, and I usually let's say you have a $10,000 account, okay? I would only use 500 to $1,000 on one options trade. So if you take that 20% loss, you're not going to take a significant hit to your portfolio. You don't want to go all in on options. It's a lot riskier. They move a lot faster. Give yourself some time, at least a month out, and make sure your option that you're buying is very liquid with high open interest of like 1,000 or more. And make sure your volume is up there too. You want to make sure there's other big time buyers in the options you're buying. Options work like stocks. You want liquidity to get in and out of that position. But yeah, minus 20% on the stop loss, and then I usually trim profits about 50%, sometimes even 100%. And then if you have some runners, sometimes you can get lucky, get a high flyer, and get a nice triple. It can happen.
But again, position sizing is key.
Yeah, and you got to understand
key.
these can languish too. So if the stock doesn't go anywhere,
oh yeah,
your call option still loses money.
Yeah.
And so
time is not on your side.
No.
And if anybody has questions on that, you can call me. I would love to talk about options. It's called the Greeks, which is your delta, your theta, your vega, how these options deteriorate over time. What happens within 30 days of expiration? How your option, like Tim just said, if it's the underlying stock's at the same price, your option is going to go down. So it's important to understand intrinsic and extrinsic value. I can go over that. If anybody has questions, they can call me or email me.
Okay, I'll tell you what, Don. Do you have anything else to add? I know you talked.
Yeah, we took a position yesterday in IGV, the big cap tech software ETF. The NASDAQ 100, while it's been going sideways, has been fighting the downdrafts from semiconductors. SOX was down since that 8.5 top. SOX was down 5.2%. But software stocks just went sideways during this period. And then with the gap down on Thursday and the recovery, two stocks that are the two biggest holdings in IGV, Adobe and Microsoft, broke out. So you're seeing a lot of strength in big cap software, and 44% of IGV is Adobe, Microsoft, Now, NOW, Intuit, INTU, CRM, and all the charts look good over the. They pulled back. Good. They held the 21, and they're making progress. So IGV.
Microsoft just announced a price increase. That's right. Microsoft pricing power. When you have pricing power, you can do anything you want to do. All right. Is that all you got, Don?
That's it.
Danny, take us home.
I will, but before I do, the person I was thinking about, the musician, was Ricky Nelson.
Oh, yeah.
Died in a plane crash up right around DeKalb, Texas, in my wife's father's property. He crashed in his field. Yeah.
Ricky Nelson?
Ricky Nelson. He was flying from Texarkana back to Dallas.
Wow.
And crashed. Anyway, so they had people coming all around their house or around their property where their house was for the next few months. By the way, you also were talking about consumer confidence leading indicators. One very good indicator that I found, and I'm still refining it, is debt. So like when companies buy charged off debt and the collectability of that charged off debt, when the collectability is pretty good, the markets are always pretty good. But when all of a sudden the collectability starts drying up, it's much harder to collect that debt. The price of that debt, charged off debt, goes down. Normally the market's correct about 6 months after that, and that's because it's very related to consumer confidence. But it's kind of underneath the hood, and it happens a little bit later, so you can kind of see that a little in advance. All right, folks, listen, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com. We won't spam them. We won't reach out to them anyway. It's up to them to reach out to us. They can sign up for our daily market insight video, goes right to their inbox 5 days a week, any day the market's open. It'll also get this podcast. You can also email any of us, Dan at revereasset.com, Don at Revere Asset, Tim at Revere Asset, Hunter at Revere Asset, or Alex at Revere Asset. And you can always call us old school at 855 Real Wealth. We'll talk to you next week on Your Money.